we're speaking now with Gautam Shah, founder Goldilocks Premium Research. Gautam, always a pleasure to have you in conversation with us here on NDTV Profit, and great to speak to you once again. Let's start with how you are looking at the recovery that we've seen on the Nifty and the Bank Nifty over the last few sessions. Are you now getting a sense that the worst is behind us, or there's more pain to come?
Good morning, Tamanna. Well, it's not just the last few sessions. I mean, if you look at the last few weeks, the Nifty is up 2,700 points from the recent low. I don't think many people in the market at the starting of April would have expected this market to rally the way it has. But I think our stance has been very clear all along that this 6-month-long bear market that we saw was a digestion of the 2-year bull market, that the market witnessed, I think, which was phenomenal in every sense. I do believe that we are out of the woods. I think these are the pointers that we put out in our recent reports. And I think the momentum has looked good. The breadth has been excellent. The participation is amazing. And you have the Bank Nifty leading this entire market up. And as we speak, you actually have more and more sectors bottoming out and starting to join the party. So it could be real estate, it could be auto, it could be PSU, and even capital goods. But let's be mindful of the fact that we've rallied a lot and there are issues at the borders, I mean, which obviously people are talking about. It's not in your control, but I've always believed that the markets are the best judge of geopolitical situations. We've seen that with the Middle East last year. As of now, the price action looks quite relaxed. I know India VIX is above 18, which is a bit of a concern, but the price action itself is not too negative. And I would say that till the Nifty is above 23,800, which is now the most important support for the rest of May, I would say this is a buy on dip kind for market. So I would be constructive if the view is 3, 6, 12 months. If the view is next couple of weeks, I think this market needs a little bit of consolidation. But if you're thinking more medium term, I think near term we are heading for 24,800, and over the medium term we are heading for 25,600. So all dips are a buy. Just be in the right pockets, be in quality stocks, and stick to the large caps.
Right. So buy on dips, Gautam, is the strategy. In fact, you've been talking about being positive with regards to where financials go. 55,000 is what you indicated last time we spoke as well. Taking into consideration the kind of moves that you're seeing in the HDFC Bank versus a Kotak Mahindra today, how would you play both these stocks? Because HDFC is the one which is giving us support of around 30 points to Nifty. Kotak is the one which is taking away almost 35 points from Nifty 50 right now. What should the strategy be?
I've always believed that stocks and sectors that don't do so badly in the difficult times end up, being the best performers in the better times. And that's exactly what has happened with financial services. In fact, we've been bullish for almost 3 or 4 months. And when the index kept correcting and we hit that level of 21,800 on the Nifty, in that period, if you see SBI, ICICI Bank and SDFC Bank, they were rock steady. Thereafter, we spotted a breakout at 53,000 levels, and we very quickly come to levels of 55,000, and there are still no signs of topping out. There are no concerns of valuations, and these are companies which don't have anything to do with foreign soil. So given all of this, and given RBI's stance, which I think is so important with what the rupee has done, with what dollar index has been doing, and this aggressive stance of RBI, I think, is acting as a tailwind, for this entire financial services space. So given all of this, if I have to think medium term, I think there is another 10% upside for the Bank Nifty towards a level of 60,000. Near term, there could be some consolidation. If it were to lose 2-3%, I think it's very normal. But I do believe the top stocks, the top 3 names will do much bigger things going forward.
Gautam, that's the view on banks. I just want to know the view on autos as well. M&M, Tata Motors in focus this morning, some FADA data coming in. The overall annual numbers are weak, but in two-wheelers and four-wheelers, which between the two do you prefer? And any specific view on a Tata Motors and M&M after the moves we've already seen?
Tamanna, you and I know really well that the market follows the principle of discounting. And in today's day and age, it discounts things really fast. I mean, what's likely to happen over 6 months, the market discounts it today. I think that's the kind of market that we live in. So the auto index witnessed a very large 25% correction in a matter of 6 months. It would have typically happened over 1 year. But given the slowdown in the economy, you must have seen how FMCG and auto behaved. So the market just discounted the weakness over a period of 6 months. Now this comeback looks durable. I think it's rebounded from some very long-term supports. Tata Motors was a multi-bagger. It's corrected about 40% from the highs and now seems to be stabilizing. So I think both for FMCG, auto and IT, I think the worst is over. All these three sectors will gradually come back. And it's sort of an advanced indication that the economy can also get back on track. So far, the earnings season has gone off relatively okay, no major shocks, and I think the price action suggests that you're going to see more upside. So while I continue to like autos, I still feel that my favorites are still financial services, PSU, and metals. I think I would bet bigger on these three sectors than the other names.
What about on the consumption side? You talked about FMCG and autos as well as banks, set for a better run. Let me broaden FMCG to the whole consumption basket. Anything over there that you see coming back, just moving on this theme of economy recovery?
See, consumption is already very expensive. Even now, it's expensive. And I think a lot of the positives of the next few years was in the price and is still in the price. That's probably the reason I'm not betting very big on consumption. And there are still questions on the recovery of the economy. So let's not say that, okay, all is well and, things have turned around. Very early days, we need to go through the entire earnings season to actually take that call. But I do believe that in this leg of the bull market, which possibly takes the Nifty back to lifetime highs, which I think is likely sometime in the next 6 to 8 months, there will be new leaders. And I think those leaders will be in the form of metals, PSU, and financial services. So I think the old favorites of the market, which was consumption and auto and IT and capital goods, they have taken a bit of a backseat, which is not a bad place to be in.
What would be your one topic in each of these three, which you mentioned?
In this market, I'm sticking to top quality. I mean, with what's happening globally, everything around the Trump trade, the kind of volatility that we are seeing, the geopolitical issues, I want to stick to top quality. I want to stick to the big boys in each of the sectors. I don't want to give out any specific names, that the top 3 or 4 names in financial services, the top 5 or 6 names in the PSU space, the power PSU, the defense PSUs, the infrastructure PSUs, and the entire metals basket. I think once the metals index gets past 8,700, I'm actually looking at a 15% move on the entire metals index in the next 6 to 8 months. Now that's big by all standards, because I don't see more than 8-10% upside on the Nifty and the Bank Nifty.
Okay, so metals is the big call. And PSUs also is the big call, because that's a change after a while in terms of what the street has been looking at. Gautam Shah, always a pleasure. Thank you so much for speaking with us. He's founder Goldilocks Premium Research.